Hi, everyone. My name is Dustin Miles. I'm with Momentum Multifamily, and I am super excited to have Chris here today. And Chris, if you want to, if you can, just kind of do a quick introduction on your end, and we'll take it from there.
Sounds good. Thanks, Dustin. Yeah, my name is Chris Lento. I'm the founder of EM Capital. We're located in Boston, Massachusetts, and we primarily invest in multifamily assets in the Southeast, so North Carolina down to Northern Florida. We do 10 to $50 million acquisitions on Class A and B properties.
Awesome. Well, great. And then I'm really interested to hear just it's I don't know my I'm a former engineer and all that, and so would love to kind of hear your background. How in the world did you get into this? Did you have family that was in multifamily, a friend? Like what that look like for you getting into multifamily?
Yeah, sure. So I'm also a former engineer. Graduated with a mechanical engineering degree, master's in mechanical engineering, and went right out of college into an aerospace company working primarily for the defense industry um, here in the Boston area. And shortly after I started work, I just got interested in real estate. Kind of,
Hmm.
lived in a three-family apartment here in Boston. It's kind of a common asset class, three apartments kind of stacked on top of each other. And, we were paying a fair amount of rent. I knew my landlord, sort of got curious, like, how did this guy buy this? How does it seems like he makes a lot of money. How does this work? Just started reading books and talking to people. And I started buying three families in Boston in my early to mid 20s,
Hmm.
just as a side thing, not really thinking it would end up being a career. And then slowly along the way, did some bigger deals, 1031 exchange some of those three families into five families. And then after 15 years at my company, really got the itch. I could kind of see where like my career path led, and none of it seemed that appealing. It was a lot of travel. It was a lot of
Hmm.
classified meetings and a lot of not moving things forward in a way that I wanted to be able to move things forward. So about 10 years ago now, I really started charting a path. Like, okay, I'm
Hmm.
gonna, build up this portfolio, take out some loans against some of the properties, and make a transition plan to go full time into this into multifamily. And yeah, that was 7 years ago where I kind of made the switch, and I've learned a ton since then,
Yeah.
and it's been a great experience.
Awesome. Yeah, it's interesting. I don't know if you remember from our conversation, but I my degree is also mechanical engineering, and then I also used to work for a defense contractor, and
Yep,
so
yep. No, I
um,
remember.
yeah, it was just kind of funny. And I was thinking about him. I think I may have been with my company maybe also for 15 years. So I was with a company for a few years before that, but it's just kind of funny how lots of parallels. For me, I kind of similarly. I was kind of one. I was a little kid, and I played soccer my whole life, and this one kid I played soccer with, his family owned a skyscraper in downtown Fort Worth, and they owned a bunch of commercial properties, and so I'm like, well, they did it, like why not me? Was kind of the
Right,
the
right.
thought process. So
Yeah, you need
um,
someone to show you that it's possible, right? And then
yeah,
once it's doable, you can then make a plan to do it.
yeah, yeah, for sure. Because I first got into kind of larger multi. I guess I'd almost kind of forgotten about that, and then I got into multifamily 12 years ago. But before that, I thought you had to be like really rich, or it was a big company, buying all these apartment complexes. Is what I thought, because I didn't know. And then learned you could buy and kind of get a small percentage and all that. So that's cool. have you when did you start, so you were doing three families and then you started buying some five families. At what point did you start to go outside of the Boston area?
So, maybe the 2008, 2009 or so,
Mm.
I cashed out, did a cash out refi, or got a home equity line of credit on one of the three families, and bought a five family in Salem, Massachusetts, which is about an hour away,
Okay.
45 minutes an hour, kind of no traffic. And the thought was, I'd already kind of bought into this idea that I wanted to get out of the Boston area because it's,
Mm.
really low cap rates, low cash flow, and there's a lot of restrictions. It's very, very resident friendly.
Yeah.
Um, and I was, trying to figure out how comfortable I was with buying an out of state asset. I knew that there was better markets that were growing faster, that had more population growth, that were maybe more lower barrier to entry, better landlord laws, but I wasn't totally sold on it. So I bought this property in Salem, and my thought process was, I'm going to treat it like it's in Florida. I'm going to
Mm.
get a full time property manager. I'm going to have a weekly call with them. I'm going to visit it quarterly. When there's an issue, I'm not going to get in the car and go fix it. I'm going to, really try to treat it like it's out of state. And that went very well. I learned a ton about managing property managers. I learned a lot of lessons. And I learned that it was doable.
Mm.
It was, I could run the property from an artificially far distance. And I was able to enjoy real estate more. I was managing my smaller stuff in Boston myself. And even though, people were always asking, like, oh, are you constantly, fixing toilets or
Yep.
unclogging drains? And the
Yep.
answer is no. But it happened enough that when a phone call came in from an unknown number or from one of your tenants, it created this sense of dread, like, oh, I got to go deal with this
Yep.
situation.
Yep.
And so even if it only maybe happened once a month, it created this like cloud that was not a fan of.
Yeah.
And
Yeah.
offloading that to the property manager and made a huge difference in my perspective on real estate and the ability to grow and my enjoyment of it. So once I proved that out to myself, I 1031 exchanged that property into a 24 unit in Tallahassee.
Hmm.
Um, and that was sort of my first sort of bigger deal, truly out of state. And
Oh,
I didn't have
wow.
any investors, but that went very well. And that gave me the confidence to start bringing in investors to buy bigger properties.
Oh, wow. Okay. The deal in Salem, was that you, 'cause I think you said you bought it in '08. Was that before or after things got kind of rocky for the US financially?
It was after.
Okay. Gotcha.
Yeah, it was sort of like, um, yeah, the things got bad here pretty quick, I think, relative to the
Mm.
country. Boston kind of tanked early and then came back.
Yeah.
Um,
Yeah.
yeah, it did fine. It
Oh,
carried,
good.
the rents were solid. All my properties during the financial crisis, the rents were fine.
Good.
So even though they lost value, they kind of came out of it. As long as you had good debt, it wasn't really a
Right.
problem.
Yeah. Which is, yeah, kind of at least some of the problem right now is
Right.
the debt problem. So,
Yep. Absolutely.
yeah.
And I
Interesting.
wasn't doing bridge loans then.
Yep. Yep. Got it. And so you did the 24 unit, and then at that point you're, getting confidence to go, what was kind of that next move as far as, I guess when did you start taking on investors? You did after that deal or
I did.
subsequent
Yeah.
after
My
that?
next deal. Yeah. My next
Okay.
deal. I partnered with some people that had an opportunity in Kentucky, and
Mm.
I had been sort of, building up my friends and family network of investors and talking about how I was, planning this career change, and
Mhm.
partnered up with some people that I had met at a number of different real estate conventions. And I was primarily in that deal the capital raiser.
Oh, okay.
However, I'm kind of being an engineer, sort of an operator at heart. Like I'm
Yeah.
always going to be involved. So I carved up myself a very little operating role that ended up being a relatively significant operating role um, on that deal. So it didn't, the way we broke it up originally is not the way we operated the property. So I have a significant role operating that, but I did raise a good amount of the capital on that as well.
Gotcha. Okay. And did you ever join? I can't remember that guy's name. The guy that was a landscaper, and then Dave Lindahl. Did you ever join his group or any of the other
I did a
kind of?
couple of like conferences with him and
Oh,
some like
okay.
educational things with him,
Hmm.
and then a bunch of other groups as well.
Okay, gotcha. Yeah, I remember. I think it was in 19. I went up to Boston to. I went to one of his events in Boston. So,
Yeah,
um,
I was probably there. I live right around the corner from where he does his events. I think now
oh,
that he does them all in like Phoenix and Texas, but at the time
prob
he was still doing
y
it in Boston.
yeah, yeah, yeah. I think it was during the summer, and I was just excited to go outside and not sweat, so that's cool, and I guess, kind of along your journey, have you joined any other groups or mentorships or,
um,
masterminds or?
yeah, I did Raise Masters last year,
Oh, okay. Okay.
which I thought was really good. It's
Okay.
Hunter Thompson's group.
Mhm.
It's really primarily focused on capital raising,
Right.
and I'm not primarily focused on capital raising, but
Mhm.
I feel like it's the part of the business that I do the least of because it's not my kind of strong suit. So in
Right.
order to sort of build up that part of the business, I joined Raise Masters, and that was a very interesting community because it's very focused on capital raising, and it's not
Right.
all just real estate. It's oil and gas investments, some small business investments, and capital raising. So it was
Hmm.
interesting to be with that kind of high energy capital raising group of people.
Right, 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 right. Yeah, yeah. And has that been a good move for you? Just kind of shoring up that thing that maybe, because we're kind of similar. We really like operations. We really like chasing deals, and kind of raising capital is kind of, I'd say, third on the list. And honestly, I mean, we love talking to investors, and that's fun. But you can only be good at so many
Right.
things, and so you gotta pick what you want to go after. So,
Yeah, no, that has been very helpful. I kind of learned a lot, met some people, kind of got more open to the idea of having, fund of fund capital raisers to partner with, partner
mm,
with other groups to raise some of the capital and, how to structure that correctly and not,
right,
run afoul of any SEC regulations. So yeah, it was very valuable.
that's awesome. Well, good. And so after, I guess, going back to the Tallahassee deal, so then that next deal, did you buy in Tallahassee again or around there, or did you go somewhere else to kind of buy that next deal with investors?
Yeah, that my deals are all over the place. I'm starting to
Okay.
kind of focus them now, but the next deal was in Kentucky, south of Louisville.
Right. Oh, yeah, you mentioned that. Yeah. Okay.
Yep. And then the next deal after that was in Raleigh,
Okay.
North Carolina, and then Charlotte, and then Columbia, South Carolina, Atlanta, Baltimore. So I'm kind of all over the place.
Wow.
We're
Okay.
really focusing on Atlanta and North Carolina right now,
Okay.
just because I think those are great markets.
Yeah.
And there's a big benefit to having kind of a tighter footprint as far
Right.
as vendors and property management and area knowledge.
Yep. So on that, do you hire out third party?
Yeah, we do third party management, and we try to get as many of our properties under one company as we can. We've had good luck with First Communities, which is acquired by Asset Living.
Oh, cool. Yeah.
Um,
Yeah.
but they're not everywhere, and they tend to only do the bigger properties. And I have a number of smaller properties still in the
Mm.
portfolio. So where we can get overlap, we do.
Gotcha. Yeah, we work with They're based in Houston, and we work real closely with them. So yeah, super familiar with them. That's cool. Yeah, I don't remember where I'd heard of First Communities, because a number of years ago I was looking in a little bit North Carolina, but I was really focused on Atlanta.
Hmm.
Frankly, it's a super easy flight from Dallas to Atlanta, so that made a whole lot of sense. And I think I saw, I don't know if you still own. I think I saw in your portfolio you own something in Stone Mountain.
Yep.
I can't remember the deal. There was a deal I bought, or I was number two I was going to buy in Stone Mountain, and I don't remember the deal, but I remember the deal. I was looking to buy it like 40 a door, and then I remember a year or two later it sold at like 80. I'm like, oh man,
Yeah,
so
yeah.
but I was pretty excited, about that deal. So um anyways, but yeah, and how in do you have a part of Atlanta that you kind of like to stay in?
Um, so we have a deal in Stone Mountain,
Hmm.
and we are looking hard at another deal in Stone Mountain on the other
Okay.
side of the city, on the Gwinnett County side, which has like amazing schools. So sort of the
Oh,
northeast side of the Stone Mountain,
oh
which is a
wow.
kind of a weird thing if you've ever seen it in person. So we like that area, like that corridor. We
Hmm.
like the Marietta, kind of really anything north of Atlanta,
Yeah.
has,
Yeah.
has really strong job growth and area median income.
Yeah.
But Atlanta's so big. I mean, you're from Dallas, so or
Mhm.
from Texas, so you're used to these huge growing cities. Um, so Atlanta's has so many good employment drivers. So we sort of like all the markets, but try to stay in the ones where crime's low and
Mhm.
has favorable economics.
Yeah, Atlanta's huge. It kind of reminds me of a hilly Houston is what it reminds me of, because Houston's just a monster city. DFW is a little different. I mean, Dallas is obviously big, but Fort Worth, which is where I live, is the 12th largest city as of recently. And so you have these two large cities, and then you have some uh, not suburban towns that are also pretty large. Arlington has 600,000 people, I think. So
Wow.
yeah, so it's just huge, whereas Atlanta's the main driver, and Houston's the main driver, so there's a lot of
Right.
similarity there, and they both have a lot of humidity too. But yeah, yeah, Atlanta's, I just remember, I don't know if you were talking about Stone Mountain. So that Stone Mountain is that's I don't know, that's not I don't know, it's not something I've really seen
No.
anywhere else. It's pretty unique, and I think when I was there one time, there was like a festival or something maybe on top or around it. I can't remember, but it's I don't know. I thought it was a cool area, honestly.
Yeah.
So
No, it is. It's very like outdoorsy, and there's a lot of hiking and walking and
yep,
picnic areas.
yep, yep. So I guess kind of turning to more today, and kind of what you guys are looking for. Are you guys the past year or so, have you been in buy mode? Or you kind of a little more wait and see? Where are you guys sitting, and just kind of where, just curious to where your head's at.
Yeah, I mean, we've been underwriting deals consistently.
Hmm.
I would say we're being not overly aggressive on them,
Hmm.
but we want to make sure that all the brokers we work with know that we're ready to transact and we're interested, and we're getting feedback back to them and working with our lenders on looking at deals. But it's just been tough to have anything pencil. I mean,
Hmm.
sellers' expectations and what works for buyers have been pretty far apart,
Yep.
and they're coming back together. I mean, we didn't do any deals in 2023. I think we're in like six best and finals,
Hmm.
and then just we're real close on a deal right now, and we've been in a number of best and finals in the last 3 months, and like
Oh
really
wow.
just missed them. So, I think that the bid ask spread is coming down, and sellers are starting to say, all right, well, we've hit our business plan numbers, and they don't need to be what they were 2 years ago. They're still good returns.
Yep.
I'm not seeing really any distressed deals. I mean, I'm hearing about them, and I see them here or there, but nothing that is enticing.
Hmm.
So it's really kind of solid deals that people have executed their business plan on and are ready to turn some capital.
Gotcha. Yeah. Yeah, most of the deals that we've seen that are distressed, um, most of them are in kind of rough parts of town, honestly.
Yep.
And the deals that were foreclosed on in '08 and '09, in those same areas, those are the ones, in trouble right now and being foreclosed on right now. Some of it's due to loans, but I mean, some of it's just due, like, they're tough areas. I don't care who you are, what management company you have. It's gonna, they're just tough spots. So, um, so that's where most of, we're seeing. There's some others in pretty decent pockets. There's a few large groups that everyone's heard of that, are having some serious struggles. And so, in some of those deals are in pretty decent pockets, and they're just struggling because their whole company is struggling. So, it's kind of case by case basis, but we're not seeing like tons and tons of deals, in heavily distressed. But I'd say just kind of overall, just because of the supply, mainly, some of it's because of the supply story. There's been so much supply,
Mhm.
like Austin's. I don't actively look there. It's just Houston and DFW for us, but Austin's had so much supply, they're having to pull way back on rents. Like, there's so much supply, like they're gonna have to, it's gonna, probably take a year or two for that to kind of level out to where they're, going to see rent growth again. Um but yeah, for the most part, most of the deals are kind of in, rougher parts of town. And there's one deal where it's a large group. And so hopefully for them it kind of just balances out, but they're selling at their debt number.
Yep.
They just kind of happen to buy it. They bought it at a tough time, and timing, they execute. It's a nice property, it's actually being, well run. They did their business plan. The macroeconomics just didn't play in their favor. So, but um, and then, are you guys, so right now you're kind of concentrating on North Carolina and then Atlanta? Are those your kind of two target markets right now?
Yeah, yeah,
Okay.
that's where we're focusing, and we're also looking at South Carolina as well. We've a property in Columbia, which has worked out really well. It's our second deal in Columbia,
Oh, cool.
um, and yeah, South Carolina is a good market as well.
Awesome. And then how, kind of work, we work with third party management too, but just kind of, what is that, anything that you guys do that you think kind of helps the properties, kind of stay in line with your projections and all that. Just, if you guys, if there's, yeah, I'm sure there's, you guys are talking to them and all that stuff, but especially kind of being, a little more distant in terms of, just you guys being in Boston. Any special things or things that you can think of that, might help, your deals kind of stay in line?
Um, I would say we're pretty tech focused.
Mm,
So we have three major PM companies that we work with. I mean, I mentioned for asset living, but we have others.
mm,
So one thing we've had success with is sort of pumping each property management company for their best practices. Any
mm,
software they're using that they like, and even just kind of bringing in ideas to them, and then having them, implement them for our properties as test cases. And then,
mm,
if they work in one area, we bring them over our other PMs. So sort of bringing the best of each PM company to the other companies and helping them see the value.
mm,
Um, and it's been good with a number of, we ended up with a company that did like smart apartments. We have two apartment buildings that are like mid rises. They're about six
oh,
stories, interior
okay.
hallways. So those have smart locks, smart thermostats that are all integrated into the property management system.
Hmm.
So from the desk, you can have when a unit gets vacant or goes vacant, it automatically sets the heat to whatever it is in the summer it'd be 75, and in the winter it would be like 67 or something like that. And sets alarms if things go too high, changes the locks automatically, things like that.
Oh, wow.
So we use that company on one of our properties, and then the property management team is using it on a number of their other properties. So we're getting a lot of goodwill from them. Some marketing software that we're sort of pushing the other groups to use. So I think kind of taking best practices from around the different areas and implementing them has been valuable. Um, yeah, we were in constant contact with the property management team. We
Mm,
have our weekly meetings, like a lot of people do.
mhm.
Always on Zoom. Make sure you're seeing people's faces, and there are
Right, yeah.
tracking sheets, and I don't think that's anything unusual. But we're calling them off cycle and just making sure we're developing a relationship with them as well, so that they're comfortable sharing issues that they have. And then additionally, in each market, we try to have sort of a third party boots in the ground that we can just call and stop by. That's
Mm,
unaffiliated with the property management team.
yeah.
Just say, hey, go drive this property and make sure that what we just heard is consistent with what's going on. Is the trash overflowing? How does it look? Things like that.
Right. Right. Gotcha. No, that's smart. Yeah, and I like the fact it's interesting. I didn't think about it that way. The fact that you're learning stuff from a few different professionals, and you're like, hey, I like that, and I like that
Definitely.
too, and so and you get to kind of mold it and make it your own. That's awesome. So well, cool. Yeah. How how can people get in touch with you? Really appreciate your time. It's great seeing you again. But how do people reach out to you and get to know you or potentially invest with you? What's the best way to do that?
Yeah, the best way is probably to reach out to me on LinkedIn at Christopher Lento or at EM Capital. And then my website, emcapitalgroup.com, has my email, phone number, LinkedIn account. Other than LinkedIn, I'm not really a social media person, so don't look for me on Facebook or Instagram. I won't respond even if I have an account.
Okay.
But yeah, website's the best way to go, I'd say.
Cool. Awesome. Well, I appreciate your time. Great seeing you again. And yeah, please reach out to Chris. Super nice guy. A lot of experience. And so yeah, if you're interested in kind of deals, especially the southeast and all that, definitely a great resource for you. So appreciate your time, Chris. Thank you. See ya.
Yeah, good talking to you. Have a good day.
Bye.